157% return. That's the return on shares of Pinterest since recommending it in April, and now I think Snapchat stock could blow it away. In this video, I'll show you what to look for when investing in social media stocks. I'll give you a complete analysis of Facebook, Pinterest, Twitter, and then reveal why I'm buying shares of Snap. We're talking social media stocks today on Let's Talk Money. Hey Bowtie Nation, Joseph Hogue here with the Let's Talk Money channel. I want to send a special shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Nation, my business is all about social. From using social media platforms like YouTube and Instagram to reach new people, to connecting and building that relationship on other platforms. I have to keep up with all the trends and the changes to these sites like Facebook, Pinterest, and Twitter. So I read through all the annual reports, I follow news sites covering the platforms, anything I can get my hands on. It's that deep understanding of the business model for these social media companies that led me to recommend shares of Pinterest on April 2nd, now up 157% in the last 4 months alone. In fact, the 5 stocks I recommended in that video are now up an average 90% over 4 months, more than double the 38% market return. Pinterest 157%, Hanes Brands 111%, Groupon up 106%. The only one not beating the market here is Teva Pharmaceuticals, and I still think it can outperform. You can pick stocks and you can beat the market. Don't let anyone ever tell you differently, but you need that deep understanding of the business model in the group of stocks. It's more than just looking at the PE ratio or picking those stocks that have been going up lately. Now, I don't want to get off on a rant here, and I am really excited about talking about social media stocks and some information that I just saw yesterday. Please just understand though, if you learn one thing from this video, even from this entire channel, it's that you've got to do that deep research into an industry or a sector. Understand how the business works for a company before you invest. Getting back to that idea though of following social media stocks, I came across some data yesterday about one social media stock in particular that absolutely blew my mind. It's one of the smaller social stocks, and I immediately went to my investing account and bought the shares. So what I want to do today is not only reveal that social media stock I'm buying, but give you an entire rundown on the space. I'll be covering 4 social media platforms: Facebook, Twitter, Pinterest, and Snapchat. We'll look at all the important information you need to follow and whether you should invest in each. Now, I want to start with how to invest in social media stocks, what to watch for, some of the factors I watch for, and then look at each of these companies: Facebook, Twitter, Pinterest, and Snap. And Nation, please, I know you want to fast forward to see those recommendations on each, but please watch this part because it will make you a better investor. What I'm going to show you here will help you decide whether to invest in these social media stocks now, a year from now, anytime you look at them. Now, we'll look at some news and trends for the social media stocks, but a lot of this comes down to just 3 measures: the user growth, especially in North American users, the average revenue per user, usually abbreviated ARPU, and my favorite valuation measure for social stocks, the enterprise value to monthly active users. So let's look at these 3 real quick, then I'll show you how to apply these on our 4 social media companies. Of course, user growth is just the increase in monthly users, usually given as a percentage and a total number compared to last year. This is usually broken out by region as well because of the difference in that revenue that a platform can get for users in different areas of the world. Nation, social platforms like Facebook and Pinterest, they run on ad dollars. That's the business model. That means growth in the users where those ad dollars are higher, like the US and Europe, are always going to be closely watched by investors. But it's not just how fast a platform can increase that monthly user base. They have to monetize that growth. So here you're going to be looking for a trend in average revenue per user, or abbreviated for ARPU. This is a great measure for separating that user growth from the platform's ability to make money. For example, if a platform has seen just a surge in its user base, naturally it's going to be reporting higher revenue, but is management really doing a good job at making money? This average revenue per user is going to show you if the company is making more money per user besides just growing that monthly active users. Last here is my all-time favorite measure for valuation: the enterprise value divided by monthly active users. Now, this enterprise value is the market cap of the stock found on any stock quote, then minus out the balance sheet cash and adding back long-term debt. Now you take this number, the enterprise value, and divide it by the monthly active users for one of the best valuation measures you can find. Of course, this is a throwback to my days as a venture capital analyst and way more useful than just looking at that PE ratio for 2 reasons. First is because what that enterprise value represents. Again, this is the market cap of the company, so what investors are willing to pay for all the shares available, then subtract out the cash and add back long-term debt the company owes. This is basically a buyout value for the company, a minimum value another company would have to pay to come in, buy out all the shares from investors, and then take on all that debt, but also accounting for all the balance sheet cash held on the books. This just gives you a purer view of the company's value, something you don't get with that traditional PE ratio, and especially useful for companies with a lot of debt or cash on the balance sheet. The second reason, though, that I use this to analyze social media stocks is because it uses that all-important monthly active users measure. A platform user base is its bread and butter, so you need a valuation measure that's going to take that into account. So if you're going to be investing in social media companies, you have got to compare them on their user base. Let's get started looking at those social media stocks though, and I want to start with a Facebook stock analysis using those three measures. Now, Facebook is the undisputed leader in social media with more than 6 times the monthly active users as any of these other platforms. Even on these huge numbers though, it still manages to grow that MAU, the monthly active users, though at a lower pace. In the second quarter, Facebook reported 11.9% growth in its global user base and 4.9% growth in the United States. The platform puts up some amazing revenue numbers, booking an average revenue of $7.05 per user globally and over $36 per user in the United States and Canada, which, when you consider that the numbers we'll see in these other platforms, just confirms Facebook's dominance. And while shares of Facebook have surged 56% over the last year, there's still a lot to like, especially over the long term. The company hasn't yet monetized its Instagram or WhatsApp platforms very well, so if they can figure out how to squeeze more revenue out of these two, it could help drive those total sales higher. That unrivaled scale has also given it a hidden asset in the user data for targeting. Nation, like it or not, that data Facebook collects on you is hugely valuable, and I don't think it's reflected in a relatively cheap 10.5 times on that enterprise to users multiple. We've still got Twitter, Pinterest, and Snapchat stock to cover, but I want to throw this out to the community. Which social media platform do you use the most each day? Not just between these 4 social media stocks either, but any social platform. Which do you use most? So scroll down and let us know in the comments below and why. Our Twitter stock analysis is up next, and the company doesn't make it easy because it doesn't break out a lot of those measures and it reports daily active users instead of monthly. We can still find that monthly active users though and use some of these other data for the growth. Twitter reports just under 340 million monthly active users, which puts it 3rd largest here, but the best user growth rate domestically. Now, the problem with this, though, is the platform is notorious for bot users, so it's hard to say how accurate this is. Now, Twitter has the 2nd highest average revenue per user and the lowest valuation on that enterprise to users ratio, but it's also seen its ad dollars shift away to some of these other platforms, and its new streaming content, while innovative, doesn't really fit with the rest of the business model. And we've still got 2 more social media stocks to cover, but I'll be putting shares of Snapchat, that's ticker SNAP, into my paper portfolio on Webull. I love the stock simulator on Webull because I can test out different strategies and follow a stock before I commit any real money. Look for that link to Webull in the video description below and you'll get a free share of stock worth up to $1,000 when you make your first deposit. Pinterest, ticker PINS, has been one of my favorite calls this year with a 157% return in just 4 months. That call was based on the fact that Pinterest is much more a product discovery and a search engine rather than a social media stock. Now, the pins on the site can be found through search for years afterwards, unlike Facebook and Twitter posts, so advertisers and content producers just love the platform. That means revenue was bound to jump, and it was only a matter of time before the market saw it. Pinterest has over 400 million active users, which, even though it's fairly new, puts it 2nd largest on our list. It's also producing some of the fastest user growth at 39% globally on a year-over-year basis and 13% in the United States. Now, I think there's still a solid opportunity for the company to catch up there in terms of that average revenue per user, and that's going to drive the shares, though at this point they're looking a little expensive. Now to the reason why I wanted to do this video, an article I read in TubeFilter, and why, despite some of the stronger metrics on some of those other platforms, I'm investing in Snap Inc., ticker SNAP. Snapchat is the smallest of the 4 platforms with just 238 million users, and while it's still booking some solid growth at 17% globally and 9% here in the United States, it's not the fastest growing of the social media stocks either. Average revenue per user is surprisingly high though, given Snapchat's smaller scale, and I think this has a lot to do with that higher valuation in the shares. That higher ARPU is driving that higher valuation. Snapchat has come a long way since those fads like the vomiting rainbows back in 2015, but it's still not as broadly used as some of these other platforms because of its walled garden approach. Now, basically, since you can only see the content on the app itself, on that Snapchat app, hell, you can't even get a public URL to share the content, the platform is just extremely restricted on its growth. But management is testing a feature to allow users to share those links more easily, and that could surprise for near-term growth. Now, something else I found in the data, and this one absolutely blew my mind, but Snap's reach in that 13 to 24-year-old demographic is 90% of the market, about 47 million users. Now, to put that into perspective, it's more users in that demographic than Facebook and Instagram combined. So while the shares are some of the most expensive in this group, I think you get support in that near-term growth and in the long term as that Gen Z demographic ages into those income years. I think Snap really starts to grow sales faster than anyone realizes. So looking back on this combined data here, Facebook is the clear leader, but user growth has slowed and the cost to advertisers may not be as competitive as it once was. So I have to wonder if that's going to slow the growth down. Twitter is the cheapest here on that enterprise to monthly users basis, but there's a reason for it. While MAU is growing, again, the platform is notorious for those bot accounts, so we have to take it with a huge grain of salt. Pinterest was a great investment, but maybe a hold right here. The user growth is still doing well, and I think they have room to improve on that revenue per user, but the valuation is just looking stretched. On the other hand, I don't think the numbers here show some of the hidden and long-term potential for Snap. It's got solid growth and could be about to boost those numbers. Over the long term, I think it turns that demographic advantage into a real moneymaker. Click on the video to the right for the next FANG stocks, 7 next-generation stocks that could produce 5 and even 10 times your investment. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.